Joining us now, former Wells Fargo CEO Dick Kovacevich. Dick, starting on the decision itself, you say this pause was a mistake. Why? Is it because you think inflation is more likely to get entrenched at 3% or higher? And if that happens, what happens next?
Well, yeah, I just think the Fed made a mistake in their supposed data-dependent decision-making. I find it hard to understand how, from the same data, you pause in June and then you project that there's going to be two more increases. I think the data showed, quite frankly, that they should have increased the interest rate by 25 basis points and perhaps only have one more to go before we get to the terminal rate. So I think this confusion has diminished the confidence of the public in the Federal Reserve, and it's confused the markets.
But Dick, didn't we spring a leak sort of back in March with SVB and other regional banks? Might they be concerned? Well, let's see how the financial system does with this level of pressure over a period of time. We'll just hike at half the rate.
Yeah, I think that's what they decided to do because they didn't expect that things would be the way they are today. And like I say, the inflation didn't come down as much as they thought. Core inflation is still very high at 5.3%. Their favorite inflation number, the PCE, actually went up. The employment was better, and bank stocks are up, and have been for the last 3 weeks. So I think they got caught by anticipating results that didn't turn out to be their way, and instead of changing their mind, they went along with what they had proposed, or at least were warning people about, that they were going to pause this time.
Dick, could there be other factors at play here? And what I mean by that is you have a debt ceiling deal now, and so the refill of the Treasury General account, which is expected to pull some liquidity out of the market now as you see all this debt being issued by Treasury. And then, of course, we still have all of the stabilization that's afoot after all of this deposit flight tied to the banking turmoil we saw earlier in the year. I mean, both of these are scenarios that economists have said could add to tighter financial conditions and help do the Fed's job for it. Do you think that has factored into officials' discussions behind doors that we don't know yet?
It could have, but it could also scare people, right? I'm going back to data dependency. They said that they're going to be data dependent. And they didn't say they were going to worry about the things that you're mentioning. It's something that they could have, but those things have settled down. I mean, the regional banks now, the deposits are staying real steady. And if you see something like this, they say, oh, my God, the Fed is still worried about these things. It could actually happen. So I think you just got to do the right thing and have confidence and show confidence when the data supports you on what you should be doing.